Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far, that you're well rested, and that you are ready to lock in for another big upcoming earnings season, which starts this week with a lot of big financial players and 2 very large semiconductor players as well. Now, as for myself, just got back home last night, so we will be fully locked in with the home setup. Glad to be back, of course, and thank you guys for your patience and understanding while I was traveling. Now, in today's video, keep in mind all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. Very good time to be selling puts right now, especially after the crazy volatility that we saw on Friday. We'll be able to get some deep strikes well below the market on some of our favorite companies. 3 reasons why I love trading the wheel strategy and why I do it with 80% of my trading capital on any given week. Number 1, it's very easy to learn if you're a beginner, and thereafter very easy to manage and scale up or down depending on the size of your account without taking on too much more additional risk as you go up through the levels. Reason number 2 why I love this strategy so much is definitely it is a very low time strategy, right? Doesn't require a lot of time whatsoever, about 10, 15, 20 minutes per day, and you are absolutely done. So if you have a job, full-time job, if you love traveling such as I do, or if you just run a business or just have no time in front of the charts, it's a very easy strategy to run if you have a low amount of time in front of your computer screen. And reason number 3 why I love this strategy so much, it is very consistent provided you respect the strategy rules, which I will outlay in today's video. The win rate is pretty good, guys. 90 to 95% of all your trades will just end up in premium, entering your pocket at the end of the week. And for all those trades that get assigned, you'll be assigned very high quality companies at quite attractive levels. As I said, so long as you are respecting the strategy rules, which we'll look at in today's video. So speaking about today's video, guys, of course, we have a lot to cover because I didn't see you guys much last week. And of course, the day where I'm flying back home, you end up with one of the biggest daily declines that we've had since the month of April, especially, right, in terms of volatility and just the sheer size and speed of the actual move. This is what you call a liquidation break, whereby the bulls kind of get surprised, right? We kind of edge higher and higher in the markets. Not too much orders are being placed, not too many new orders, not too many new market participants, as we're well extended from the 12 EMA on the weekly timeframes, well extended from the 12 EMAs on the monthly timeframes as well. And everybody knows that there's a pullback coming, just nobody knows why and or when. So you could tell the positioning in the markets, at least the most recent 2 weeks, as we've been covering on the channel, was a little bit light, right? Not too many names getting follow through. You had some names such as the neo cloud data center providers like Iris Energy, some of the nuclear names like Oklo, etc. A lot of the high flying names were pushing higher and higher. And then of course we had the big piece of news on AMD earlier this week that saw that stock rally a lot higher. But a lot of the names, guys, hadn't been doing too much, even big tech, right? Just a little bit of a recap here. Apple hadn't been doing anything, no push further, no gains of levels higher and higher in the last 2-3 weeks. Amazon has been doing nothing in the last 3 weeks. Even Google, right, after reaching the peak of 255, has done nothing in the last 3 weeks. Meta has been nowhere to be found in the last 3 weeks. Microsoft arguably has been nowhere to be found in the last month worth of trading. Netflix, same concept as well. Nvidia started breaking higher, but truly, did NVIDIA really break out that much when you compare it with a chart like, let's say, I don't know, we'll just take maybe ASML or something like a Micron, right? Did NVIDIA really push that much higher? No, not really. Tesla had a good spat, right, in the markets. But then again, in the last 2-3 weeks, no real gains of some levels. Palantir had some nice action, but still not gaining levels any higher. SoFi, everybody's favorite fintech play, that also struggled with the levels a few weeks ago, right? And even so many more names. I mean, arguably only some semiconductor names, such as TSM, big breakout play on TSM, and some of the other equipment manufacturers like LRCX, etc., they had the big breakouts. But really, was the entire market breaking out as the S&P was kind of clipping into new highs? Not that much. Even the banks, right? The banks kind of stopped gaining levels a few weeks ago, started to pull back into their own respective earnings season, right? Even some of the more consumer defensive plays, such as maybe Walmart. Walmart has done nothing in the last few weeks. Costco as well. So could you really say that the market breadth was contributing to the SPY gaining the levels incrementally all the time? No, right? It was certain pockets in the market. And as a result, when it's only certain pockets of the market and the volume gets a little bit thin and the people participating up here gets a little bit thin, it only takes you one little surprise attack, right? One big news catalyst, and you get the liquidation break. Liquidation break because there's not enough liquidity in the order books to absorb all of this one-time selling. As a result, it just drops and drops and drops. So in today's video, a bit of a long introduction, right? In today's video, we'll be taking a look at a few things. Number one, the outlook for the current week. With the day on Friday, how do we stand on the technical aspect, of course, the SPY, the QQQ, and several other major sectors? What are we looking at right here? Could it possibly go for a bit more in terms of weekly consolidation? We've been waiting for weekly consolidation, to be fair, on the channel for a couple weeks now, right? We were saying that any catalyst, we weren't sure what it was going to be, whether it was going to be something tariff related, which it ended up being, or maybe the delayed non-farm payrolls that would have been posted, or maybe whatever it could have been, right? Retail sales numbers, revisions to economic data in terms of economic output, right? We weren't quite sure what the catalyst was going to be. However, we did know that there were a few elements on the table that could possibly contribute to the sell-off in the event it was going to happen. And it did happen, of course, guys. So we'll take a look at exactly what we're looking at this week in terms of what do we have for earnings? Number two, what do we have for macro? And then a quick little run through of the charts. Number two, in today's video, I'll be giving you guys a brief recap on the strategy rules. Always very important to remember our strategy rules, especially when the volatility ticks up. We don't want to be chasing certain names too high. We want to be respecting the strategy rules to make sure that we're putting all the odds in our favor of either not being assigned, or if we are assigned, we want to get the best possible prices for our assignments. And then number three, of course, top 5 options of the week. And as per usual, after that, I have 10 bonus plays for you. So make sure you stick around to the end, guys. Should be a very fun video. Let's jump right into it. So on the Friday session, the expectations for the week. Of course, you can see the SPY here down 2.7, the Q's down 3.47. Do we have any catalysts for more? Well, let's do a quick little recap of exactly what happened on Friday. I'm pretty sure a lot of you guys have had the time to read up on it. So here's kind of the timeline, right? Early morning, Friday morning, this is what happened. Trump threatened a massive tariff hike on China over the rare earths dispute. But not only rare earths, he went on a massive tangent here saying, listen, China is putting a lot of restrictions on a lot of the products it's exporting, not only on the United States, but on everybody else. Then he was saying, I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems to be no reason to do so. So this whole entire thing came out early in the morning, and it kind of surprised everybody, especially in terms of the threat. Nobody knew exactly what was going to happen and or when. He had teased possibly for 100% tariff increases throughout the day, but he said November the 1st, which is when China was going to implement their own restrictions, right, on their own exports towards other countries. Thereafter, after the close, we actually got it right away. Trump put an extra 100% tariff on China imports, adds export controls on critical software, and then you got another 1% decline on the indexes. If you take a look at this right here, this is your 4 p.m. candle, another big 1% sell down, pure liquidation break, no buyer stepping in. It was Friday after the close. Most of the big boys have all left as well. But now you have a full weekend for people to kind of assess the situation. And now the bulls will be ready. Will they play some defense or not? That is the big question, but at least now they have a time to read, absorb, and now can come to the consideration whether or not they want to start buying the dip fairly heavily. Now, in terms of today, Sunday, we got some more updates. So as you'll see right here, there's a few things put out. Number one, by the Chinese Foreign Ministry, issuing a statement on the rare earth controls and the U.S. trade war. So they said it's a legitimate measure to protect their Chinese interests, citing the geopolitical instability. It's pretty funny because that's exactly what the U.S. says when they do it. They say the export controls are not a ban, right? And that global supply chains are expected to have a limited impact overall, that their rare earth export licenses will be approved for appropriate civilian use, but restricted for military use. Trump had gone on and on about the magnets in this big post, right? Obviously, a lot of those are for military purposes. And so on and so forth, saying that the 100% U.S. tariffs in retaliation to export controls is a double standard. Once again, saying they don't want to fight a trade war, but they're not afraid to fight one. Really reminiscent of what we had back in April overall, yeah? Thereafter, we had more comments about J.D. Vance talking to Trump about China yesterday, saying we appreciate the friendship Trump developed with China's President Xi, and that Trump hopes the U.S. doesn't need to use leverage on China. And then, to wrap it all off, late this afternoon, we got this post right here. Well, not late this afternoon, I assume around noontime. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. President Donald J. Trump. So, As a result, we had, well, obviously the futures aren't open right now, filming this at about 5:40 p.m. Matter of fact, while I'll be filming this video, futures will open in 20 minutes towards the end of the video. However, we have something that is open, which is Bitcoin. As you can see, Bitcoin on the Saturday session didn't go to the lows of Friday, and even Ethereum, right, rallying up 9.72. You can see most of the crypto market today after those comments by JD Vance and the president himself. Crypto is now actually rallying. Can we possibly see a little bit of upticks in the futures market? I do believe so indeed. And whenever you have a situation like this, guys, where you get a clean liquidation break, a surprise attack by the bears, you always have to ask yourself after these big one-day events, right? Does it make logical sense? The markets were very extended. We've been commenting this for a while. Very extended. And let's be honest, it was getting too easy. Way, way, way too easy. When I see it getting too easy, I take some pause. As a matter of fact, I did tell you guys last week that I was going to be very cautious leading into earnings season, keeping a lot of buying power back for myself. If you take a look at some of the trades that we've made over the course of this week, you will see that, well, not only because I was traveling, but also what I was telling my Discord group, and I told you guys on YouTube as well, right? That I was not going to position at those heightened levels. I was going to be very patient. And as I always tell you guys, wait for the market to come to me, right? The week prior, tons of trades. The week before that, decent amount of trades. The week before that, 3 weeks ago, tons of trades. Last week, I took 3 trades, guys, and only closed 1 directional bet as well. I've been winding down a lot of my directional bets that hit our take profit levels, and now we're sitting on some really good capital, really good buying power in anticipation of something like this. I thought that it might come upon resumption of the, well, you know, upon the conclusion of the government shutdown, maybe releasing the non-farm payrolls, and maybe with some earnings volatility as well. I did not think that Friday was going to happen the way it did, but I was ready for any situation because I understood that the markets were very extended. And as a result, you always have to ask yourself the question after a big day like that, what has changed, right? Is it a one-time news event, aka a short-term narrative? Or number 2, is the macro broken, right? Is it something big with the jobs report? Did you see the Fed start panicking and increasing their interest rates to 50 basis points? Do you see disastrous GDP numbers, disastrous jobs numbers, disastrous manufacturing or services PMI outputs? The answers are no. Whenever it's big macro catalysts, then you have to pay attention because then a one-day event can turn into weeks or possibly a few months of consolidation. When it's a one-day event based entirely upon a narrative or entirely upon one news headline, you know most likely it's going to be a Band-Aid rip type of sell-off. Quick sell-off, catch everybody off guard, get some liquidations, get everybody out of margin, get everybody to kind of panic sell around here, and then the markets will probably adjust faster than if it was a general or an overall macro sell-off, which could take a lot more time. So as a result, is this one a buy the dip opportunity? Yes, but carefully. And thankfully for us, the VIX now up a ton, which means the wheel strategy is, well, it's always been on the table, but now is where it excels because we're going to get a lot of levels way below the market. When the volatility increases and we're running the wheel strategy, guys, it does not mean that you run the wheel strategy as close as in a low volatile scenario and you just get to collect more premium up here. No. What it means is you have to adjust your strikes way below the market and still get compensated the same as if we're trading down here. Meaning, if I'm down here on volatility and I'm looking to sell puts on Amazon, maybe I can only find Amazon strikes 2-3% away. When the volatility is all the way up here, maybe I can find strikes on Amazon 5-6-7% away. So you get a lot more distance is what I'm trying to say for the same amount of ROI. AKA you get better levels and lower chances of being assigned as well because it takes big sustained moves to keep the volatility this high. So keep that in mind. Now, what do we have in terms of earnings and macro? Well, this week's going to be a big week of earnings, guys. It all starts on Tuesday where we get a lot of the big banks, JP Morgan, Goldman Sachs, Citi, Wells Fargo, and even BlackRock. So is this week a great week to play the wheel on the banks? Not before Tuesday, but maybe after. After Tuesday morning, we might get some phenomenal opportunities. But the volatility may not stop there. On the Wednesday session, we get more banks, but also we get ASML. The first of 2 very large semiconductor companies this week, the second one being on Thursday with TSMC before the market opened. But this week is largely going to be a lot about the banks. And shout out to American Express, also wrapping up the week for our first credit card player. Thereafter, earnings season kind of goes like this. This week is all about the banks and ASML and TSM. The week after that, you're starting to get a little bit of tech right now. Netflix and Tesla thereafter with a bunch of other names. But the biggest week of them all, guys, is the week of October 27th. That's when you get most of all the big tech names, as you can see, Meta, Microsoft, Alphabet, Apple, and so many other players there. So the next 3, 4, 5 weeks should be very fun, very interesting in the markets, and I'll take you through it every single day. And of course, guys, this week, you just want to be careful with what you're trading. As you guys know, the wheel strategy, you never want to trade stocks that have earnings this week, at least not before. I'm a fan of playing them after, especially on some big drops, because the volatility will be pretty high and you'll be able to get some really good prices. But before is always dicey, right? It's dubious because earnings are always a casino, guys. A company can have very good earnings and go down 4, 5, 6, 7% nevertheless. You guys know that by now. So be careful this week, but you'll see the top 5 options plays largely are things that will not be affected so much by this week's earnings. Now, in terms of macro, what do we have to look out for other than the follow-up with the China tariff situation? Well, to be honest with you, not that much. We have another speech by Jerome Powell on Tuesday. I'm not expecting him to say anything different. We had one of those last week, and it really didn't do anything for the market. Pretty sure everybody knows Jerome Powell's stance right now, waiting for more data, waiting for the jobs reports, and possibly still 2 interest rate cuts before the end of the year. One in October at the end of the month, and then one in December as well. So there's probably not going to be anything new in that press release by Jerome Powell. On Thursday, though, you do get a couple things. We know the government is still shut down. So in terms of official government releases, you're going to have to take a bit of a pause on those, like the non-farm payrolls, but we are going to be getting producer price index numbers and also retail sales numbers. So this week, in terms of the overall macro releases, not that heavy. This week is all going to be about this good old China situation and the follow through and people's interpretations of it, or any further comments by either China or the US administration on the matter. And of course, it's going to be all about these earnings, right? So it'll be largely price action dependent, but we know that the bears have made a substantial move on the indexes right now. So where do we currently stand? Well, if you take a look here, right, we had the daily uptrends. They were very clear as day, and now you've lost your daily higher lows across the board. You've lost it on the Qs. You've also lost it on the S&P as well. No secret there. So as a result, your daily uptrends have been officially lost. This is the first time in 5 months that we've lost daily uptrends. They tried it a few times here. We're not able to flush the lows, right? No daily downtrends, no breaks of the higher lows. This is the first time that it's happened, so it has to be notable to you. As a result, we know that a loss of the daily uptrend, as we've been saying for weeks and weeks now, would just result in some weekly consolidation. Do the bulls have a lot of space? The answer is yes. We're coming into first level right now on the SPY, 650 down to 645. Level number 2, 640 down to 632. This is the bigger one. Why? Because these are your weekly higher lows. Can't lose those. That will be the first time you lose the weekly uptrend since we started it all the way back in April. So the bulls are still working with a lot of space, but the bears are not going to be able to get through these 2 locations easily, right? I'm not expecting a straight flush this entire week all the way down, yeah? However, we can see some follow through on consolidation, and the bears definitely do have a bit of space to work with here if they want to push the markets a little bit further. On the SPY and on the QQQ is the exact same concept. The Qs have lost the daily uptrend at this point, and now you might just be looking down here for your first line of defense, previous resistance, current support, and the 12 EMA, something that has been respected a lot since the tariff sell-off, and as a result, 582 down to 575 is your first line of defense. The bigger one, though, is your weekly higher lows down here, 562 down to about 553. So pay attention, guys. The bulls are working with a lot of space right here. The bears are in short-term control, and we know it can possibly be still very volatile. As I said, with the 2 pieces that we got today, right, the Vance comments and President Trump's comments himself, we should be able to maybe get a bit of relief if the crypto markets are anything to gauge our reaction from into Monday morning. That being said, there's still going to be some really nice discounts, but I'll just give you guys this right now. I know the introduction is long, but we haven't seen each other in a while, and a big thing happened on Friday, right? So I have to set the table for today's video. That being said, where are we coming down on some of these names, right? I want you guys to look at some of these names, even the ones that are down 10, 9, 8%, because you might look at these and say, oh, well, we must be having some great buying opportunities, right? Elf Beauty, where is it right now? Well, I like playing Elf Beauty down here, like the 110 level. Where is it? Did we drop so much? No, we just dropped from there back into support where we were a few weeks ago, right? If you take a look at other names, right? Look at Robinhood. Where are we dropping from? Oh, we're dropping from the stars down to the moon? Okay, we're still not on Earth, right? That being said, so many other names are in the exact same situation. Take a look at Baba, right? Oh, we're dropping from the stars to the moon? We're still not on Earth, right? So many names are like that. So pay attention. Shopify, where are we? Right? Even though it's dropped 7-8%, is it really pulled back that much? No. And even some of the semiconductor plays as well, right? Micron, where have we dropped from, right? Infinity down to like the stars? All right, perfect. You know what I mean? So all in context, guys. The context matters a lot. You might see big drops here, but you have to understand, like, where are you in the context of some of these charts? A lot of these charts are still very extended, which is what I was telling my Discord members during the Friday sell-off session. I was seeing a ton of big sell-offs here, and I was like, you know what? Like, I don't want to play ASTS all the way up here, even if it has dropped 5.5%. I don't necessarily want to play Palantir up here with the wheel strategy. We're still at the exact same levels. So a lot of these names, even though they've come down a lot, were not anywhere notable to me that I actually want to play some action. So as a result, all of the wheel trades that I'll be talking about in today's video will not be on names like that. Names that are, you know, the charts all the way up here and we've pulled back a little bit even after one single day, right? No. I want good pullback locations on high quality companies. So those are the types of plays that we'll be focusing on today, right? Names like, LRCX, right? What are we doing, guys? Dropping from the stars all the way to the moon, right? Where's Earth? Earth is all the way like down here type of thing. So no, I'm not playing the pullbacks on some of these names that look exactly like this, like Iris Energy, right? What do you want me to do with this one up here? With the wheel strategy. Not talking about other strategies like momentum-based strategies whereby you can possibly play some call debit spreads or you're possibly day trading with some call options or put options. No, that's not today's video, right? This video is focused on the wheel strategy. And for the wheel strategy, there are certain rules that we have to follow. Speaking of the rules, right? Here are all the rules. Now, there was a time where I used to go through these rules every single video. However, now to save time on the videos, even if today I'll be way over because of that big introduction, now, I will refer you guys to a link down below in the video description. It's where I used to go over them for 10 minutes. I'll just give you guys that exact same segment that I used to do. I go through these rules one by one. For now, though, take a screenshot. If you're a recurring viewer to the channel, you probably know these rules by heart right now. However, if you're brand new to the channel, check out the video in the description, guys. It's only 10 minutes. I go through these rules one by one and why they each matter so much. Every single one of these rules, guys, is here for a reason. Ask me how I know, right? After building this strategy, every one of these matters a lot. They all reduce your chances of being assigned, and they all guarantee that you're taking high quality and also high consistency, high probability of success trades. So the link in the video description, it'll be titled like Bull Market Wheel Strategies Explained with a little YouTube thumbnail and then like a link right beside it. So click on that video. Definitely take 10 minutes to watch it because right now I'll just show them right now on the screen just as a quick refresher, especially in very volatile times, guys. You always got to trade with the strategy rules. It will save you from bad trades overall. That being said, those are your strategy rules. And now, what everybody's been waiting for, let's get into the top 5 options plays, shall we? And you will find, once again, that a lot of these plays are recurring from prior weeks. Why? Because they're still in very attractive levels. As a result, I still want to play them, essentially, right? Like Google. Google's a prime example, right? It's not a top 5 options play, but I'm giving you an example, right? I used to love playing Google here, and then the last time we used to play it was back here. What do you want me to do with this one all the way up here? I can't play Google anymore, right? There's a few names similar to that. If you have a very big account, we were loving playing ASML all the way down here into big support. I can't play ASML all the way up here anymore. So when names are in zones that I appreciate, such as Apple, when Apple was down here, we were playing Apple a ton on the wheel. And even these pullbacks right here, we were playing the strategy down there. We used to play it and I used to love it. But now what do you want me to do with Apple all the way up here? Can't play it anymore. And lastly, AMD. I don't know how many times you guys saw me on the channel play AMD over the course of the past 2 months saying, you know, 150 to 140 was an optimal zone to play the wheel. We've made a ton of money doing it down there. What do you want me to do with AMD all the way up here now? There's just no structure, no support. As a result, I can't play it on the wheel anymore, right? So the companies that I'm going to give you guys today are companies that are still high quality companies in attractive areas that we can play. So moving on to company number 1, we're going to be talking about Amazon once again. And I mean it, guys, right? Eventually, Amazon will do the same thing. Eventually, Amazon's going to put in a breakout move. We're going to be all the way up here. And then sadly, we won't be able to play Amazon anymore. But the entire time, it's in a beautiful zone of consolidation for what? The past 3-4 months at this point in time. Beautiful location of consolidation for Amazon. Essentially what we're doing right now is we're setting monthly higher lows, right? Monthly uptrend, looking for the monthly higher lows into key areas of structure, such as the monthly 12 EMA and horizontal support. And we're just looking for the monthly breakout and possibly, the monthly breakout, retest, and run trade. So the entire time it's retesting, as it has been for the last 3-4 months, Amazon hasn't done much. We want to be making the most of it and play the wheel strategy on it because it's just a very high quality, high conviction stock with great technical support. That being said, even at 220 or under, the valuation of the stock is not too bad at all. They have no problems whatsoever. All lines of business are firing on all cylinders. You can see the analyst price targets are all way above the stock right now. EPS forecast for the next 4 years, beautiful, consistent. Revenue forecast for the next 4 years, beautiful and consistent as well. All of those reasons are why I want to play Amazon in these lower levels. And we've been having a lot of fun playing Amazon at these lower levels as well. So if we take a look at the expected move for Amazon, the expected move, I moved the line when I click my mouse there. The expected move on Amazon for the week is 208.65. So let me just put it back. 208.65. By the way, if you don't know where to go find the expected moves, you can go to this website right here, barchart.com. Type it into Google, bar chart, expected move, Amazon, or whatever stock you want. You will come to this page right here. You can either look at the lower end of the expected move on the chart, or you can go down to this table right here. You want to be writing put options below the lower end of the expected move. It just increases your odds of not being assigned. That being said, the expected move is down here into support and also below the 200 EMA. That support is 212, down about 206. Very key and clutch area for Amazon. As a result, I do want to play it down there. So let's go shopping on the options chain, see what we can get, yeah? So on the options chain, as you guys know the rules by now, we are looking for 0.5%. That is our weekly take-home pay. It means that the chances of being assigned will be quite low, as opposed to playing something super close to the market, right? Amazon's trading for 215. So obviously, I'm not going to be writing 215. My chance of assignment is going to be very high, even though the premium looks super attractive. Don't trap yourself, right? That being said, you can play a lot lower. My sweet spot is 0.5%. Why? Because the ROI on an annualized basis is still very good. It's market outperforming ROI, but also the chances of assignment are really low. So where's the 0.5% rule? When I say 0.5%, guys, very simple. All you have to do is divide the strike price by 2 in your head and look for that on the bid. Meaning, if I'm looking for 0.5% here, I want to find a strike where when I divide it by 2, 202 divided by 2 is what? 101. Look for $1.01 on the bid. You can see it's right there. So that's how I know, all right, good. That's my 0.5% strike. So if you want me to show you right here, like, well, I mean, if you want me to do 101 divided by 202.50, right? You'll see this is literally 0.5%. Well, I didn't do that properly. It's actually $1.01 divided by 202.50. There you go. It's roughly 0.5%, right? So what did I say the expected move was? The expected move is 208.65. 208.65, which is lower, a lot lower than the price, almost 3.5% down, right? Look, this is what happens when the VIX goes a lot higher, right? I can find my 0.5%, 202.50, which is well below the expected move, right? 202.50, guys, is all the way down here, 6.5% below the expected move, well below the 200-day EMA, possibly all the way down there into oversold conditions on the daily, and even below our support area. So the bears have to get through a lot to come and tag us by the end of the week. And we are sitting very close to the $200 psychological level for Amazon. I would not mind doing that strike at all. I think that's a fantastic strike with some very good distance by the Friday close. In the event Amazon drops again coming into tomorrow on the Monday session, who knows? Maybe you'll even be able to find the 200 strike, or if you're really lucky, if Amazon somehow has another 2-3% day, maybe, just maybe, you find the 197.5s. How crazy is that, right? We were playing the 220s just not too long ago, and now you already have access to the lower 200 strikes, which is a fantastic area to be playing Amazon. So I'll be looking forward to finding those setups myself. Now, moving into stock number 2, guys. Oh, by the way, the futures market are just about to open here in about 3 minutes, almost 6 p.m. as I'm filming this. Let's move into stock number 2 while that happens. Stock number 2 is going to be Affirm. Affirm for a few reasons. We've been playing it on the wheel for the most recent few weeks, right? They had a fantastic earnings, which I covered on the channel back here. Stock hit $100, and now we are down almost 30%, from that high after earnings, but nothing bad has happened to the stock at all. If anything, they had phenomenal earnings, showed fantastic growth, showed fantastic moves to profitability. The expectations for the forward growth are also very solid too. EPS up and to the right and flipping from negative to positive and ramping a lot in the next 4 years. Revenue equally ramping a ton in the next 4 years. This is my favorite buy now, pay later player. It's not even close. They have the lowest delinquency rates. They have the best customers. They have the best merchant partnerships as well. In the event that I want to play a buy now, pay later stock, this is always going to be the one that I kind of default to. That being said, down here also into support is not the worst proposition at all into those lower 60 ranges. 60 has been a very nice area for a firm several times in the past. You got a lot of weekly moving averages down there. And also the valuation down here, guys, is pretty good, right? We last did the valuation at 80 bucks. Just take a bit more than 10% off this. You're sitting at like a 1.35 peg. You're sitting at like a 6 forward price to sales for the end of next year, which is really, really, really solid, all things considered. So I do enjoy playing this pullback on a firm while they're giving it to us. That being said, the expected move for the week is 65.73. That would be, from that top right there, 35%. However, you guys know the rules, right? The VIX is higher and we'll probably be able to get well under that expected move. Let's go shopping for the 0.5% rule for the Friday close. So we're looking for 0.5%. We're looking for about 30 cents for a $60 strike. And look at that. At 60 bucks, you are literally getting 30 cents. That's pretty nuts, guys. That's almost 10% below the expected move. And from where we are now to the Friday close, that would be another 15% drop on a firm in one single week. And you'd actually be getting closer to our second area of support, arguably a equally solid one down here in the lower 50s. So if I could find those strikes on a firm this week, I definitely will, of course, be playing lower 60s, that far below the expected move, that deep into a support area, that much off of the earnings high. Yes, please, I'll be doing a firm because at the end of the day, what are we looking for here, guys? You're just looking for some monthly higher lows in the context of a very nice monthly uptrend, looking for those infamous monthly higher lows. So not looking too bad there at all. I'm waiting for my futures to open. They're not open just yet. Therefore, I am sad. Stock number 3, as part of our analysis, guys, SoFi, everybody's favorite fintech stock. Let's see what this one is looking like. So SoFi, you remember on this daily downtrend down there, we were playing a ton of wheel options down here, and they all worked out very nicely. That being said, SoFi on the Friday session was down 8% off of some increases of volatility. Yes, please, I'll be playing this one as well for a few key reasons. Number one, big support, 24, down about 22 bucks, all the highs from 2021. Now, we knew SoFi needed to consolidate, and they did consolidate before going on a heck of a tear in the last 5 days. And now consolidation once more. No new highs, so this could still just be the all same weekly consolidation mode for the stock at around 25 bucks. Forward peg ratio is pretty good at a 1.61, and the forward price to sales metric is also not too bad at all. So good fundamentals and decent technical setup. 2 reasons why I do enjoy playing SoFi. And I do believe the valuation is still very manageable down there, of course. That being said, the expected move for the week is 24.24. Let's go see on SoFi. How much further below 24.24 can we actually get on this stock? Let's go have a look, shall we? So if we're looking for 0.5%, guys, I mean, in the low 20s range, you'll be looking for what, 10, 12 cents? Take a look how far you can actually get that one. 21.5 or $22. Fantastic strikes on SoFi, in my opinion. The 22s for 14, 15 cents, not bad at all. For Friday, right? Before Friday close, the stock would have to come down another 16%. See, this is what I mean. When the VIX is high like this, it really helps you out. You can get really, really, really deep on some of these option plays, right? 22 is the bottom end of support, so I'll definitely be looking at those lower 20 strikes to fire off some contracts on SoFi. That is stock number 3, and unfortunately, the futures market is still not open right now. Okay, wait, now they are. Just updated my stuff. Now we're good. So now we got the pops, right? That being said, the VIX will probably still be high, and the levels that I just gave you for all these companies will probably be similar, although they might be a little bit higher. Just watch the levels, right? So that being said, that's it for stock number 3. Stock number 4, everybody's favorite semiconductor stock. Well, maybe not anymore. Maybe some people prefer other ones, but this is still one of my favorite semiconductor stocks. It's going to be NVIDIA. So NVIDIA having a big tumble on the Friday session, down about 5%. Sorry, got something in my eye. That being said, it's been a while that we've had some good volatility, good enough to play the lower range of support down there on NVIDIA. The expected move on NVIDIA is 174.38. Around the 175 region is the stock trading at decent value. Yeah, I do think so. About a 1.71 peg. And if I were to do the 2026 forward PE, it'd actually be high 20s instead of a 39 for end of 2025. 2026's looks a lot better, but that's why we use the peg ratio, right? So you don't have to do that stuff. You can just see now, in terms of the next 3 years of growth, is it good? And as a matter of fact, it is good at 175. So decent valuation, and also NVIDIA hasn't really moonshotted like some other semiconductor names out there. And I always enjoy playing this lower level. You might remember back here, we were playing the heck out of this lower range of support down there, talking about 170 down about 165. Looking forward to possibly playing it again. That being said, expected move 174.38. Let's have a look, guys. How much further below that can we get on NVIDIA? By the way, sorry, I'm a bit sick. I don't know if you can tell by my voice, guys. I got a bit of a flu like the past week, my last week of vacation. It was kind of unfortunate. Still getting through it right now, but I digress. Take a look down here, right? If we're looking for the 0.5% rule in the 160 range, you'd be looking for about 80, 85 cents, yeah? Look at this, 165. The expected move is 175 almost, and I'm able to get strikes, guys, $10 lower at 165, which, mind you, is exactly located at the bottom end of support. So if NVIDIA has a plus 0.5%, 1% morning tomorrow, and the VIX and the volatility is still high in the markets, you might still be able to find below the expected move. I'm a fan of down here, guys, like 170 to 165. With Friday's action, with Friday's pricing, you can find this 165s. If NVIDIA pops up tomorrow 2% first thing in the morning, these probably won't be available. But 167, 170, maybe, and those will still be very interesting. So I will be looking for them as it does respect all of the rules. It's below the expected move into support as well, right? Hopefully some of these names will be green tomorrow, red tomorrow, but let's just say they're green, but not super green to where we can still find levels below our expected moves and into support levels. I'm still a fan of playing them. So that's how you kind of readjust a little bit depending on the price action, yeah? Because obviously Friday and tonight's futures open, they're, well, let's just say they're not normal, right? So we kind of got to adjust our strategy a little bit, but always focus on the levels, guys. The levels, the strike prices, and if you're getting the proper ROI. Stock number 5 is going to be Airbnb. This one's been the focus of our analysis for the past few weeks for the exact same reason, right? We've been very close to a huge area of support. Let me just take the volume off of this because it adds too much on the chart in my opinion. So the support level, guys, 118 at about 104. Yeah, it's been the same area of support for what? The past 3 years at this point in time. Once again, acting as support, but AMD has been improving fundamentals this entire time. Speaking about fundamentals at 120, decent peg ratio right there. Very decent free cash flow yield. As a result, I do think that this one is worth a bid at these lower prices. That being said, the expected move for Airbnb is 114.07, very nicely into our support range, right? I've been having fun playing Airbnb on and off the last few weeks. Maybe you guys have been doing that as well. That being said, let's go shopping on Airbnb. See, with the VIX at the heightened volatility, where can we possibly find some Airbnb strikes all the way down there? 114. If you're looking for the teens, right? Half of that would be what? 55, 60 cents on the bid. Where can we find that? You can find it at 113. So Airbnb, not as much volatility as some other names out there because it didn't get hit as hard, right? If you take a look at the Friday action, only down 1.63. Airbnb really doesn't have much to do with the whole tariff situation. But if we can find still some strikes around 114, 113 into tomorrow, I'd be a decent fan of playing that one, right? Decently into our support area, good valuation, and just a very casual name to play, right? Not affected by some of the banking names this week, not affected by some of the semiconductor plays. By the way, you might say that, well, NVIDIA might be affected by ASML and TSM. I think ASML and TSM should have some pretty decent earnings. They're going to say the demand is still through the roof, which obviously NVIDIA has been saying so far. But if I'm going to play any semiconductor names this week, guys, I'm going to play one that's relatively close to support that has a lot of price action for the bears to possibly get through, right? Before they can actually breach us all the way down here. Instead of playing names like LRCX, which have almost no support that they've built on the way up. LRCX, Micron, way too extended. AMD, super extended as well. So I'd rather play one of those names that has a lot of price action to kind of be able to gauge some support levels, but also that the bears have to put in a whole lot of work to get through all of these guys as if they're not even there, right? That's like months of support that was built at those lower levels. So that is it for your top 5 options plays, guys. Hopefully you guys enjoyed those. Now, without taking too much more time, let's dive into the 10 bonus plays. Now, the 10 bonus plays, it's not that they're not as good as the top 5, guys. It's just that sometimes they're more volatile and or sometimes they're just not ready yet, but soon. They're names that I keep very close on the watch list that if they pop up on a random Monday, Tuesday, Wednesday, I'll be wanting to play them outside of the top 5, and I'll be dividing them into 4 different sections. 1, 4 growth plays. 2 value plays. 3, I'm going to give you guys 4 plays for small accounts, ones that I'm looking at this week as well. And then number 4, 2 plays for very big accounts. So let's jump right into the bonus plays, shall we? Okay, so the bonus plays, 4 growth names. Number 1 is going to be BITX, 2 times leverage Bitcoin. Why? Well, because Bitcoin just had a massive down day on the Friday session, and we are finally coming back into some of the levels that I really enjoy playing this one. The lower 50s to be specific. If you ask me where that is in our bigger Bitcoin chart, that is the 107 down to $100,000 psychological area of support. Big down day on Bitcoin. Nice recovery today, but there will be some residual volatility in the markets, and it could be a very interesting proposition to play the lower 50s or possibly under 50. You do not have to play these too close, these 2 times leverage plays, guys. Because they're 2 times leverage and they have a ton of volatility, you'll be able to play them with some good distance. Look at these strikes on BITX, right? You can also get the lower 40s range on Bitcoin, which would be like under 100,000 almost. So that's crazy distance. There will possibly be some very good residual value on these come Monday morning. So low to mid 40s, I'm a big fan of playing some BITX. Number 2 is going to be good old SOXL. So this one could be a very interesting play. You got TSM, you have ASML coming into their earnings sessions over the course of this week too. Look at this massive candle on SOXL on Friday, down 20%. Now, tomorrow will probably be a nice little green pop for the markets overall, maybe some semiconductors names as well. But you guys get the point by now, right? There will be some residual volatility. You possibly will be able to find the lower 20s or mid $20 strikes. Matter of fact, if you want to take a look at some of the trades that I took last Friday amidst the volatility, you'll see what distance I was able to get on SOXL. I didn't even get the bottom of this move, right? I had to go to sleep. Couldn't stay for the afternoon. It was like midnight by the time I logged off, midday. So I took this trade when SOXL was down 13%. It went down even lower. I got the 27 strikes for 25 cents, which is very good. It's almost 1% for the week. 27 is all the way down here. It has to come all the way back down here to possibly assign me. And now that it's come down even more, maybe tomorrow, who knows, it'll be up a little bit. Look at the premiums now. You can even get lower, right? Lower than 27. I mean, the premiums are still there. You can now get the 24s, maybe even the 23s. Could be a very interesting proposition if you enjoy playing these with a bit of volatility. Just don't do what some people do oftentimes. A lot of times people get trapped on these because they play too close. You get seduced by the sheer amount of premium at the higher levels. Now that's fine if you plan to take like a DCA approach, like do one here and then do one here and then do one here. That's fine. But too many people do bulk orders here, get trapped, and then have to suffer a big drawdown, right? Do not let that be you. Play the markets with some distance. Let the market come to you. Do not get seduced by premium trading the wheel, guys. It's not worth it in my opinion. Number 3 is going to be HIMS. HIMS, another stock with great volatility coming into support right now, 52.5, down about 48.69. Look at the distance that I was able to get on this HIMS contract last Friday. I did a 35 strike, an actual 35 strike, and I got 25 cents for it. Absolutely nuts, right? Where's 35 from here, guys? That would be by Friday, an additional sell-off of another somehow 35%. Now I did, right? The October 17th, right? That being said, maybe you're not going to be able to find this Friday for $35. That was at peak volatility, but that is absolutely nuts, right? Giving me some premium down there on HIMS, 35% lower in a single week. Absolutely ridiculous, right? Now, you might not be able to get as good as I did, but possibly you could find maybe some 40s, right? Lower 40 strikes, which are still very attractive in my opinion. You can see the premium now is about 42, 41 cents down there. A lot of my Discord members were able to get in the 30s, if you know what to look out for, right? But anything 40, very close to 40, that would still be a heck of a sell-off in one single week, right? You're talking about like 20+% by Friday. Very low probability of it happening, of course, which is why I did not mind doing that one. And the last one is going to be CoreWeave. So CoreWeave, because it has some good price action structure, right? I know a lot of people are focusing on APLD. Where is APLD? Like, how am I going to play APLD all the way up here, right? Now, down here is the next relevant area of support, and maybe you can find some APLD premium down there. I don't know. I haven't checked the options chain. We can check together, right? So if I'm looking for, low 20s down there, we'll see what we can get. low 20s on the options chain. Matter of fact, you can surprisingly get some still. So we'll see what happens, but that is how I would play APLD, right? On a pullback there. Iris Energy, almost probably impossible to play this one. The next area of price action structure is, well, you guys don't want to know where. Let's just say it's like under 30 pretty much, because there's just nothing. They set no support on the way up. And the wheel strategy is one that excels when you're playing support areas, not just playing, momentum strategies on this one, but I get it. A lot of people want to play this one. Same thing with NBIS, has not set any support whatsoever, arguably, since the 80s down there, right? So that being said, the one that has the most areas of support, in my humble opinion, is CoreWeave, 120 and even a bit lower at 100. That being said, with the increases in volatility, you can find some really insane strike prices. And a lot of my Discord members found those last week on the Friday session. Take a look. You can get all the way down here, 110. For 56 to 60 cents, which is literally 0.5%, right? Where is 110 on CoreWeave by the Friday session? 110 on CoreWeave is like 20% lower. So a lot of these, you can play with some really, really, really good distance, really good volatility. If for some reason CoreWeave opens up Monday down 3, 4, 5%, you'll probably be able to get even lower than 110. A lot of my Discord members were finding the low 100s. That's crazy, right? So when you're looking at these big volatile plays, try and go as low as possible, guys. And you'll find that more often than not, it is really easy money because you are just buying, or rather you're selling these people. Keep in mind, right? Some people are actually buying these options, right? With the expectation of making big money by Friday. Now, a lot of the people are day trading them. So they'll get in on Friday, possibly for some continuation, close it on Monday type of thing. But the poor people holding these into Friday, right? 99% of them are going to end up worthless, and 99% of us selling those options to them are going to end up in pure profit. So those are just 4 growth names that I'll be looking at for the weekend, but hopefully the way that I'm pricing these out and playing them helps you if ever you're looking at other different names. Just pay special attention, guys. Target very large areas of support, right? It just gives you the benefit of having bulls sitting there and possibly being able to bid up the price. And when you get there, instead of just straight flushing through levels of something that just has not established any support levels on the way up whatsoever, right? That being said, now 2 value names that I'm looking out for. Number 1 is going to be Blackstone. Yes, Blackstone. Haven't talked about this one, guys, in months and months and months, since all the way back here in June. Very nice sell-off, no earnings this week. I'll be looking for maybe 140 down to 130 strikes on Blackstone. Very solid company, needs no introduction. Investment manager. They're one of the largest rental real estate property owners in North America at this point in time, but they have so much else on their books, right? Beautiful EPS expansion the next few years, beautiful revenue expansion. They pay a dividend, very well run and very well managed company, and phenomenal support. These are the 2021 highs, resistance here as well, support from the tariffs, and now we probably will be finding support down there again in those lower levels. And the other value name I'm looking at is Nike, because finally now Nike, now I didn't get stuck in the stock here, but Nike, if Nike somehow has some continuation to the downside, we might be able to play 60s again. You guys remember how often I was playing Nike back here? Maybe we could play Nike again down here in the lower 60s. No earnings risk. They already had their earnings, and now deep support areas down there, 60. So keep it on the watch list. If you're looking to play something like Nike, I do enjoy this level of lower support, guys. These are prices that you haven't seen since 2017, 2018, or the big tariff sell-off during the course of this year, while the recovery story is well underway, and also while the company is, in my opinion, very fairly priced. So those are 2 value names to look out for possibly. Now, 4 names for small accounts. I figured I should give more this week just because of the size of the sell-off on Friday. There's going to be something for everybody this week. Sentinel One, one of my favorite smaller cap, right? Cybersecurity companies down here, 17 down to about 14. Beautiful support range for the last 2-3 years at this point in time. While the company's been improving fundamentals, we saw their earnings. Their earnings were really good, phenomenal bumps on revenue, very good net new ARR, very good bumps on customers as well, and now flipping to positive margins too. That being said, around the $19 range, the company was already fairly cheap in terms of the PEG and in terms of price to sales, especially in relation to other cybersecurity companies. And in terms of the forward projections, their share price has a good amount of expansion that could possibly be had over the next year or two. So I do enjoy this lower area on Sentinel One. I think that this is a good location, and I've been playing it quite regularly. Number 2 is going to be New Holdings. We covered their earnings after they had them back in August. You might remember that. Very good valuation, even at $13 where we did it after their earnings. phenomenal valuation, low 20s multiple, and in terms of the 2027 base and bull case scenarios, really good upside on this stock as well. So not that big of a deal if we're looking to play it on a pullback, of course. Big area of prior resistance, support. You can tell how big of an area of price action this was. And now look, finally, we're pulling back into it. So if this does continue, you'll find me selling some put options, 14 down to 13 bucks. Small account play, right? You don't need a lot of money to play this one. Another one, Oscar Health. You might remember Oscar Health. As a matter of fact, I don't know if I told you guys this week, but I took profits on a very nice contract on Oscar. We had some leap call options that we bought all the way down here, rode up all the way. We literally sold the top of those contracts, I'm happy to say. So the call options are out, and now maybe the wheel can go back in, because we used to play the wheel a lot. Down here, $15, $14 range, and now big pullback on Oscar Health. And look, you're actually starting to have a bit of strike prices down there again, right? The whole $15 area, 15.5. So Oscar Health, take a look at this one, right? 16, now offering 0.5% to around 1%. If you get more declines on Oscar Health this week, pulls you more into our first line of defense support here, 18 down to 17. Who knows? Maybe we once again can find the $15 strikes. They were not there a week or two ago, and now they might just be there again. So watch out for that one if you're interested. And now lastly, Rocket Mortgage. Rocket Mortgage, same thing. We had some call options back here, leap call options, sold half of them there. So the other half there, we're all out of call options. And now we are playing it on the wheel again, just looking for some casual monthly consolidation after a massive rally, just a very healthy pullback. And you guys can clearly tell this area here, this whole 15.5 down to about 14.5, this little pocket, big monthly resistance, and now possibly monthly support with the EMAs there as well. So I like this pullback, guys. Very big pullback, daily oversold conditions. So maybe the bears are getting a little bit tired on this pullback. As a result, 14s is an area that I do enjoy playing with the wheel on this stock. So keep that in mind if you are interested in playing the same thing. Those are 4 small account plays that I'm looking at every single week, pretty much at this point in time. And now 2 very big account plays right now. Talking about Visa back, right? So it started breaking out. You might remember we were playing it a whole bunch back here. Last week, no go, because it rallied, right? We were 2 off the support range. Now back into it again. So you guys know the drill, 340 down to 330. Very nice location for Visa, in my humble opinion. Phenomenal company, needs no introduction. Beautiful support area. I will be playing it off of there. And the other company, SPGI, nothing wrong with this business whatsoever. They got killed after the FactSet earnings, back into support, 480 down to about 456. I enjoy playing this support range for some short put options. Previous 2021 highs, big support lows, tariff lows, and now lows once again. We covered them after earnings about a month or 2 ago at this point in time, and we said that there is absolutely nothing wrong with this business. If anything, they're firing on all cylinders. They're back to the 2021 high prices while having much better fundamentals than back then and a very nice growth outlook. Look at this growth outlook. Very nice for the next 4 years on EPS, and beautiful outlook for revenue as well. Solid company, great fundamentals, great competitive advantages, and on a very attractive pullback right now. All things that I like doing when I'm looking for short put options. And by the way, just coming out of daily oversold conditions. So if you revisit it, they'll be revisiting daily oversold conditions again. All criteria that I enjoy finding for some of my wheel plays. So that being said, that's everything for today's video. It was a bit of a longer video, guys, because I had to do the big introduction. We haven't seen each other since last week, right? So I had a lot of things to recap, setting the table for this week. I'm pretty sure you guys wanted more information than less. So there it is. That's today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel. If you're new, we'd love to have you back. We do these every Sunday in preparation of the upcoming week. And lastly, but not least, if you have any questions or comments, feel free to leave them down below in the comment section. You guys have any questions on the strategy? I would love to help you out. And number 2, if you guys are playing any stocks that I haven't mentioned and you wanted to share them with the comment section, definitely do so. And I'll give you guys my input. And if I can help along the way, I'm always happy to do that. And last but not least, in the event that you guys wanted to join a trading and investing community where we specialize in this strategy, we trade a whole bunch of it every single week, you might consider joining our trading and investing community with over 300 other members. In the community, of course, you get access to all of my personal wheel trades in real time. But not only the wheel trades, as you guys know, I do tons of leap call options, call debit spreads, directional trades, etc., etc., etc. But of course, you get all of the wheel trades. Here are just a lot of the trades that we've made in the past few months. The green check marks are wins. The red little circles are losses. The targets are assignments overall. So I'll just take you guys back through, the last few months of trading. I like to keep my wins pretty big and frequent and the losses infrequent and pretty small. So here's just a lot of the trades that we've made, always transparent with you guys in the last few months. You also get access to all of our private morning live streams. Monday to Friday, I stream live for about 2-3 hours where I trade live, but I also take all of your questions on your stocks, your options, and your long-term portfolios. You can also ask me your questions throughout the day in our chat rooms, and I'm always very fast to answer. Additionally, you get access to our private video educational section where I put out educational videos on technical analysis, fundamental analysis, how to build a trading account, whether you have a small, medium, or large one, what proportion of the account should be in what style of trades, etc., to get the best lift in the account, but also to manage your risk accordingly. Tons of different strategy videos for leaps, for call debit spreads, for put credit spreads. All of my educational content that's not on YouTube for everything that I use on a daily basis is all in that section. Our members find tremendous value from there. And last but not least, guys, you get access to all of my watch lists. You guys can copy paste all my watch lists and all my charts, which means that when you see support areas that I've drawn manually myself, or all of these earnings breakdowns or just fundamental analysis breakdowns on hundreds of companies, you guys just get to copy paste all of that as if it were yours. It takes a lot of the work off of your plate, and I'm glad to do that work for you. So those are most of the benefits that you will find in the Discord, and you'll have a whole bunch of fun with us in the process. Eventually, maybe if I get the consent from our Discord members, I could show you the success channel, but our guys have been absolutely crushing it this entire year. Sometimes you'll find some of them typing in the comment section for how good they've been doing this year on the YouTube videos, etc. But it's been a really good year, not only for myself, but also for the Discord members as well. And that's it, guys. If you are interested in joining the community, the link is always down below in the video description. Hopefully I get to see a few of you guys in there over the next coming days. And if not, I guess I'll see you all back here on the channel. I'm going to go rest my voice and go rest myself and be ready for a beautiful week in the markets. Hopefully you guys crush it in the markets this week. Crush your trades. And always remember, guys, don't chase the market. Let the market come to you. That's it for me. Take care. Have a great rest of your evening. Peace.